Welcome to another edition of the Heritage Wealth Planning YouTube channel. Busy day at the Heritage Wealth Planning Homestead here in North Fulton County, Georgia. Woo, graduation party. And how ironic is that? Because we're going to talk about the state of Georgia, how it affects you tax-wise from a retiree perspective. And we're going on, moving forward, as we tackle every single state's taxes for retiree, state by state by state. And now we're in the great state of Georgia, the Peachtree State, and that's where you find me. So now let's start as I want by looking at Kiplinger.com. The top states here, let me minimize myself, my friends. We see the top, I thought I did, there we go. We see the top states that they have in this nice little color-coordinated map. The dark green is the most tax-friendly. The dark blue is the least tax-friendly. And as I've said before, lots of surprises, actually. The white is the middle of the road. Light green is more tax-friendly and light blue is less. So you got California, Illinois, even New Jersey is middle of the road, whereas Iowa, Arkansas, Oklahoma are not tax-friendly. Isn't that interesting? This is why, as you're thinking about where to retire, you've really got to dive deep and look at more than just, the tax rate from an income tax perspective is high. This is not tax friendly. Nothing could be further from the truth. So Georgia is one of the most tax friendly. So let's take a look at it, actually. And we'll see what we have. All right. So let's see here. Kiplingers.com, state by state guided taxes on retirees. Georgia, the bottom line. States for retirees. It's a peachy tax environment for retirees. Nice little pun on words there, Kiplinger. I get it. Peachtree State is Peachtree. Social Security income is exempt, and so is up to $35,000 of most retirement income for those ages 62 to 64. For those ages 65 or older, the exemption is $65,000 per taxpayer. So, my friends, as per taxpayer, married, filing, jointly, you get $130,000 of exemption on your income in the state of Georgia. Now, I got to tell you, I bet a lot of you were not aware of that because I was not even aware of that until about 4 years or so ago. And I couldn't believe it when my friends who's a CPA told me about that. I was stunned. And if I'm stunned, I imagine most people are stunned by that. So when you're looking at state taxes and you're looking at solely not having a state income tax, you got to think twice about that because maybe there's some other rules of the road that you need to take into consideration. State sales tax is 4%, which is quite low. Jurisdictions may add up to another 4% on their own taxes. And that, again, 8% on sales tax, I know that seems pretty high, but by and large, that's pretty low when you factor in the fact you really have no state income tax unless you're making pretty significant amount of money here in the state of Georgia. Let's see. This is fantastic too. Well, the state doesn't tax grocery food sales. Localities can. Again, the most they can tax is 4%. So essentially, the most sales tax you're going to pay is 4% on your groceries, on your food. Again, how many localities are really going to do that? So this is why you really want to look at the locality. If you want to look at Fulton County or Cherokee County right to our west, or Forsyth County right to our north, or whatever county you're looking at, you got to see, do they tax food? If they don't, and the food is a bulk of your consumption, which most likely it will be, you don't have an income tax and you don't have a sales tax. Pretty doggone good if you ask me. Income tax range 1% on the first $1,000 of net taxable income for married filed jointly. So obviously most people don't pay 1%. 6% on taxable income for married couples filing jointly over $10,000. So the vast majority of workers in Georgia are paying a 6% tax rate to the state. So they're getting you while you're working, you're digging ditches for a living, they're getting you there, but they're not getting you while you retire. So it absolutely makes no sense if you're going to live in Georgia and work not to stay here and retire. It just doesn't. Effective income tax rate is 5.5% for individuals and 5.8% for joint. Again, that's income tax rate, most likely if you're working, because once you hit 62 and above, you're not going to have hardly much of tax at all. Social Security benefits are not taxed. We already talked about the exemptions for other retirement income. For residents 65 and older, the exclusion is $65,000 per taxpayer, and that includes every kind of source of income that you have: IRAs, distributions, 401ks. So they just talk about. So if you have a private pension, if you have a government, if you have a pension, if you have any income and you're over 65,000 of the income is not subject to taxation per taxpayer. It's quite amazing, actually. Now, the median property tax on Georgia is $1,300 on the median home value, 147. So that's roughly a 1%, a little bit less than 1%. And again, you got to factor in 1%. That is higher than California, but the house value in Georgia is significantly lower than California from a pure dollar perspective, which is all that matters. The state of Georgia is quite favorable when it comes to property tax. Tax breaks for seniors. For homeowners 62 and older who earn $10,000 or less, up to $10,000 of their property assessed value is exempt from taxes. People 62 and older whose family income married filing jointly does not exceed $30,000 may qualify for an exemption from state and county property taxes equal to the amount by which the assessed value of the home exceeds the assessed value of the preceding year. All right, so basically saying if you don't make more than $30,000, you're married filing jointly. Last year, your assessed value was $150,000. This year is $175,000. You could get an exemption of that $25,000 increase in your assessed value. All right, so that's pretty good. Now, I will say there's a caveat here. You got to look at your county because you're like in Fulton County, and I've made a huge mistake here. There's further exemptions that you can have in your specific county. In fact, I did a video on that where I said how I lost $3,500, and I'll link to that here. Let's see, where are we at okay, so I'll link to that here and you can see it'll go across the right hand if you like to see that. And what it is, you got to file a county homestead exemption, and you only have to do it once. And once you do it, it's on the books forever and ever and ever. And it deducts up to $30,000 of your assessed value for your home. And I did not know that. So basically, if your assessed value is $200,000 and you're paying 1% tax on that, you're paying $2,000. If your assessed value is $200,000 and you get the homestead exemption for your county, your assessed value at that point is $170,000 and you're paying $1,700 in property taxes. That's $300 savings right there. And if you times that by how many years you've lived in Georgia, that's how you get the $3,500 I came up with. So frustrating. And Atlanta Journal-Constitution, other local papers are pretty good at reminding you, but you have to fill it out by April 1st of that year. So 2018, April 1st, 2018, I had to fill it out, and I wasn't made aware of that other than through my wife by April 4th. And I was like, I missed it by 3 days. I mean, $300 to $300, my friends. Individuals 65 and older can claim an exemption from all state property taxes on their home and up to 10 acres of land. Wow. Okay, state property taxes, you claim a home, you can claim an exemption on state property taxes of your home and up to 10 acres, not necessarily your locality. For those 65 and older who earn $10,000 or less, it's just not going to be an issue. Many counties offer homestead exemptions that may be more beneficial to the exemptions offered by the state. Exactly. The homestead exemption is deducted from the assessed value. So it's confusing as all can be, but just look at your county homestead, my friends. You've got to do this. I'm telling you, I did research on every county, not every, but the vast, the most populous counties right around Atlanta, and they all offer a pretty significant homestead exemption. In fact, I'll probably do videos on that because I think it's actually that important to see for those who live in the state of Georgia. The homestead exemptions should not be overlooked. Georgia levies a 7% tax of registration. Oh man, that where they hit you hard is when you go to the DMV to get your car registered. You got to pay up front big time. I mean, I think my vehicle was $20,000 assessed value. I paid like $1,400, and it was painful to write that check. I think it's like $30 a year after that. So the one-time fee is pretty significant, but after that, it's minimal. Electric vehicles are subject to a $200 annual license fee. I don't know if that's on top of the 7% registration. Should be, but I don't know. And of course, there's no inheritance or estate tax in Georgia. All right. So by and large, Georgia's just fantastic. And if you just look at, we're going to see the other two websites we look at too, but if you just look at state income tax and then property tax as from a bird's eye view, you're going to miss the boat. And Georgia should do a much better job. People, like if you're trying to relocate from Illinois or something like that, come down here to Georgia. Leave your politics behind, but come down here to Georgia. We have a very, very tax favorable state for sure. So let's go to Georgia, and this will be on our taxfoundation.org. Individual tax rate 6%. State and local, let's see, which is state and local tax burden 9.1%. So again, roughly in the top third, and the lower the number here, or I should say the higher the number. So 50 is Alaska, that's number one. That's the least tax burdensome. 32 is on the lower end, that's for sure, in terms of tax burdensome. April 17th is Tax Freedom Day, which is in the top 20. And that's one time you do want to be in the top 20. All right, so that's individual taxes there. So state and local tax burden 9.1, not overly favorable, not significantly poor, but there's more to it than that, because don't forget, for retirees is what we're talking about here. For retirees, it's just wonderful because there is no tax burden essentially. For workers, yeah, it's not favorable in the least. But even that 9.1 isn't too bad. I mean, Florida is 8.9. All right, Florida does not have an income tax, but they're still 8.9. Georgia's 9.1, and it has a pretty sizable income tax. So there you go. Let's look at sales tax. 7.15 in the state of Georgia. That's not too shabby. The average local sales tax 3.1, 4% for the state. Now 7.15 rank in the top 20. Again, you want to be high. You don't want to be in the top 20. But given that, I'm just looking at retirees now, and given that the bulk of what is going to be taxed is from food, and there is no sales tax on food, you got to look beyond just the numbers here, because if you're spending $1,000 a month on food, that's not taxed, my friends. So not only do you not pay an income tax in Georgia, you don't pay a sales tax on that food that you consume. I mean, it's pretty good. Now, the localities can charge it for sure, and that's why you got to look at what your locality is charging you. But from a pure perspective on overall sales tax for a retiree, their vehicles where they get you, and other consumption goods. But in terms of food, yeah, it's pretty good. So that is misleading. That's why you got to dive into this stuff. You can't just look at Tax Foundation. You got to look at Kiblinger's. You got to look at Tax Foundation. You got to look at some of the other websites that are out there too. Cigarette tax is very low, only 37 cents. So if you smoke in Georgia, you're in one of the best states there are. It doesn't surprise me. We're knee deep in the South. Gasoline tax is pretty high in Georgia, which doesn't surprise me, because commute in Atlanta is enough to want to drop an anvil on your head. And so if you are making that commute, you are going to pay gas taxes for sure. Let's see. Property tax. And here we're again smack dab in the middle. I mean, in the top third in terms of the most favorable. The higher the rank here, the most favorable it is. And so $1,125 is a per capita state property tax collection. You got to remember, per capita is not median. All we really care about is median, in terms of you got 50% above, 50% below. And essentially is about 1% is your Georgia state property tax. So if you're going to buy a house in North Fulton County and the average house is $500,000, you're going to pay $5,000 in property taxes, just as a thought process there. If you buy a house in California and the average house is $750,000, you're going to pay $7,500 in Florida. Okay, just as an FYI. So from a percentage, it's pretty high. From an actual dollar amount collected, it's not quite as high, simply because the average median. Again, I'm getting these two things mixed up. I got to start saying the median home value in Georgia is low relative to some of those northeastern and coastal states. All right, so by and large, pretty favorable for Georgia. Let's look at the .com. Look at Georgia. And we're going to do what we've done before, which is say you're married filing jointly. You're going to take $25,000 of Social Security, and we're going to say $25,000 of retirement income. Oops. And that's IRA distributions and whatnot. And we're going to say you're born in 1953 and you're married filing jointly. And then we're going to hit enter. And I bet we get a big fat goose egg. Yep, you get a big fat goose egg for income taxes there. So let's even say we have, for married filing jointly, $100,000 of income, and you're going to get a big fat goose egg there. So you can make, again, you can make $125,000 and not pay a dime to the state of Georgia in income tax. Now, they're not well known about that because they are not a zero tax state. It does have an income tax. But how many of y'all know that? I mean, think about it. $125,000 in income and not paying income tax. Now let's watch this though. Now we're going to say we got $25,000 Social Security, and we're going to reduce our income by $25,000 to $75,000, and we're going to say we're single. And this is what I always say about the marriage, the widow's tax trap. All right, so even that's still nothing. Oh wait, I got to reduce that to single. There we go. So watch this. Now you pay $241. So, I mean, not a huge significant tax burden, but it is a tax burden nonetheless. For having less income, you're single, you pay more tax, and that is a widow's tax trap. Well, I hope this is helpful to you, my friends. Georgia is very favorable for sure across the board. It'd be hard to beat the state of Georgia in taxes for sure. The weather, you have the beach, you have access, pretty easy access to the Florida beaches, to the Gulf Coast of Gulf Shores in Alabama. You even got the Tybee Island and whatnot. Georgia's a pretty good state for sure. A lot going on here, and the tax burden is just quite friendly. So hope this helps. Don't forget to subscribe below. Subscribe. Thumbs up are always helpful. Believe it or not, thumbs down are helpful too. It turns out any kind of comments that you have, thumbs up or thumbs down, will help me in terms of getting YouTube to recognize the content that we're doing. So put a thumbs up or thumbs down there for sure. And don't forget to subscribe, then hit the notification little bell there to be notified of future content on the Heritage Wealth Planning YouTube channel. And finally, go over to the heritagewealthplanning.com website, heritagewealthplanning.com. Got my blog, my podcast. I got an interactive retirement calculator you can choose. Lots of good stuff over there at heritagewealthplanning.com. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.